Hey everybody, this is John O'Hardy, associated broker with Coldwell Banker Realty and the owner of J.O. Homes. And today I have Luke Hamlet with Supreme Lending joining me. And you ready?
I am ready. Let's do this.
All right, well, thank you for tuning in to our first real estate market update of 2022. First, we'll kick it off with what we're seeing in the current market. And that is that this year has started off with a vengeance.
Yeah.
It's been insane, right? Over the holidays, there weren't a whole lot of sellers. That most of them were investors, and with that comes its own kind of issues. But now we're seeing a lot of sellers coming into the market.
Yep.
And typically provides a better product to a home buyer. They've been taking care of it as they would want instead of worrying about their pocketbook so much. And that really is, there's several reasons for that, and it's a good thing for everybody. But first, a lot of it has to do with the outlook of interest rates that Luke will be getting into in just a second. And it's also to do with just supply and demand. It's crazy because there are still so many buyers that want to buy, and yet not as many sellers as can supply that. So yes, homes are still being sold over the asking price, right? There's different strategies of how you price a home when you put it on the market, and that can definitely play a factor. Also, there's the issue of appraisals, and appraisers have been getting a bit more difficult, I feel, in the recent past, and may continue. But one reason I really like working with Supreme Lending is that y'all have your own appraisal review board, and it's in-house, and it just helps smooth out the process a lot better.
Yep.
But on to the one topic everybody really wants to know: what are you seeing for interest rates?
They're going up. In general, they're going up. We've seen it be extremely gradual over the last 6 months, and ever since the end of December, it's just really skyrocketed. There's a lot of things that play into this right now, but just to keep it layman's terms for everyone, the Fed is raising the rate. We know it's going to happen. We don't know when it's going to happen. We are expecting about 3 different hikes over this year. So that's really kind of prompting a lot of people to get off the fence and go ahead and get this in before the rates get too high. And maybe then they don't qualify for the home that they wanted, that they might have been qualified for 6 months ago. So rates are still really good. In the grand scheme of things, we're back to the same levels where we were pre-pandemic. So rates are still really good. I've seen a heck of a lot higher than where they are right now. But if you're on the fence, you got to get off. Your time's running out.
Yeah, I think the real point to that is that whatever price home you're looking at, right? Let's say you're looking at 350 or 800, wherever you're looking. When the interest rates is 3.25%, it's going to cost X amount, right? When it goes up to 4%, it's going to cost you a whole lot more to buy that same house, right? Now, 4% historically is a phenomenal interest rate. And really, we're not expecting it to get to any scary levels, but it will change the amount that you are spending on the same exact house.
Yep.
Right? And so what does the future really hold? What do we see in the market right now? I think, one, disclaimer, right? Same thing with the weatherman, right? It may not even freeze tonight. Who knows? But, the future is definitely unknown. However, as professionals that are full-time and working in this for years now, we listen to the Fed. Fed says that they're going to raise interest rates. We go through our own economic forecast and planning out what's going on. And I see it staying a seller's market for the foreseeable future, right? Doesn't mean that prices aren't going to balance out, because really, I think, last year was a phenomenon and likely never be matched again. Can I say that? In our area, in North Dallas, Plano, this whole general metroplex, we've seen interest or appreciation go up 20 to 25% given your area, right? It's insane, right? And not that homes are overpriced, because they're not. We're just super affordable compared to everywhere else. And we have such highly educated and well-income people that it supports that, right? And people are still coming in and nobody wants to leave. Great place to live, nobody wants to leave, right? And so I think prices will level out a bit. But are they going down? Are they overpriced? I'd say no.
I agree.
So from that, back to kind of what Luke was suggesting earlier about getting off the fence, it's really important that you go ahead and get pre-qualified. You don't have to buy a house today. You can let that pre-qualification letter lapse and expire.
Absolutely.
Right? But what that does is allows you to know what the hurdles are and allows you to be ready for the day that you see that house, right? You may be just gotten married, just graduated college, right? And you might be thinking, okay, in 2 or 3 years, I want to buy a house. How much does a mortgage application credit pool change your credit score?
So a couple of things on application. One, it doesn't cost you any money to get pre-approved. We always recommend, if you think you're going to buy a house in the next 2 years, do it now. Now is the time to go ahead and get pre-approved. A lot of times we get questions about, what about my credit score? How much is it going to drop? I went and bought a car a couple of months ago and my score just dropped significantly. And that's a great question to have, because that means you're watching your credit, and that's a good thing. When you go in to buy a car, your credit's going to get pulled multiple times, and you're going to see that drop in score. It's probably going to be 15, 30 points, could be even higher. When you go in to buy a mortgage, we pull a completely different credit report than what you see online or what you see at the car dealership. So when I pull it, it's viewed as a mortgage credit report. We get treated differently.
Yep.
So it opens you up to 30 days to allow you to shop, to allow your credit to be pulled multiple times by mortgage professionals only. If one person pulls that report in 30 days, you're going to see a 0 to a 1 point drop. If you have 3, 4, 5 or more, you're going to see maybe a 3 to a 5 point drop.
Yeah.
So, and losing a couple of points is not the end of the world. We deal with credit tiers. So if you're a 780 and all of a sudden you drop down to a 775, you're not going to see a difference. Yeah. What really matters is when you're in the lower range, the low 600s. That's where it can really, really make a big difference.
Yeah, and it's all about getting you where you need to be for whenever you buy that house, right? And it's about doing the work up front.
Yes.
Finding the area that has the schools and has the house and has the price, and all these things, and making sure that you qualify, or what steps you need to do to qualify, and not overburdening yourself that I found the perfect home. Yep. I need it today. Well, if it's a great home and priced well, there's multiple offers, and you really need to have that done before, right? And so doing the legwork, it doesn't cost really anything.
And you might be approved for a $600,000, $700,000, $800,000 home, but your comfort range with that total monthly payment might be more like $400,000.
Yeah.
So we don't want you to find that perfect home and then realize you're not comfortable with the payment, and that's a horrible deal for everyone involved.
Yeah, and that actually brings up something else. I don't ever ask my client how much you qualify for, right? What are you comfortable spending? Then I call Luke, hey, X name person wants to spend $400,000. Is that all right? Can you support that? And then he says yes or no, right? And that's as far as it goes. I don't care that you qualify for $1 million house and you're spending $300,000, right? It's my job to find you the right house, and that's up to your comfort level. And that's why it's really important that you use somebody that you know, like, and trust, right? And so, we're both in the business of just doing right by our clients, and that's it. So we did want to throw out a little plug. Next month at noon, right? We're airing this at 11:30, and at noon we'll be live on Zoom for a little Q&A. Not really a presentation, but we'll be providing a lot of information for home buyers, Whether or not, you bought a house 3 years ago, you're thinking about making a move, you want to know some more information. Maybe you haven't bought a house in 20 years. Maybe you're a first-time home buyer, right? This is open floor for anybody to ask anything they want as it pertains to home buying, right? And so please, if you liked this video, share it with your friends, share it on social media, right? First it airs on JO Homes Facebook page, then Luke Hamlet, Supreme Lending's Facebook page, and myself will be airing it on our pages. Please like, share it, send it to your friends, tell them there's a home buyer seminar, and we would also love to hear from you. So we'll be providing our information directly after this on a following slide. And if you'd like any further information on this monthly video, then feel free to text us or email us that. And also, if you would like further analytics on your area, what maybe you could sell your house for, or any further details, please feel free to reach out and we would love to connect with you. Again, my name's John O'Hardy. This is Luke Hamlet. Personal information provided just after this. Thank you.